Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. Thanks for staying with us on the channel. We have, of course, a couple of minutes before the pre-opening rates kick in and looks like it's going to be a decent start to trade. Rajesh Palvia is joining in. He is from Axis Securities and he's going to talk a little bit about the F&O market and how things are stacked up. Rajesh, one thing's for sure that the December lows are holding quite well. But what do you see as the upside for this market if the pullback does get extended on the upside? And what are the stocks to look at now?
Good morning, Sonia. So this is fourth week where we are consolidating in a range only, very tight range, 17,800 to 18,100. But in the previous trading session, what we have seen that, short covering action has been visible in the index also. A lot of call writer has covered their position for 17,900, 18,000 strike in the previous trading session. And looking at the contribution from some of the large cap stocks in the previous session is giving us some confidence that yes, there is a ray of hope that possibly we can be able to give breakout of this consolidation range within 1 or 2 days. So we are projecting that Nifty can inch up further higher towards 18,150 to 18,200 in the continuation of this pullback, which we have seen from the previous trading session. To initiate to play this up move, we are initiating here to buy 18,050 call option, which was closed at around 75 level in the last session. We are projecting target of 120 to 130 for this call option. One can keep a stop loss of 45. Even in the previous session, we have seen some recovery has been seen in the bank Nifty. Also, some of the banking stocks has also contributed in this rally. For Bank Nifty, 42,600, 700 is the critical level as of now. But looking at the setup, we believe that once Bank Nifty manages to cross those levels, then one round of short covering can be seen ahead of this weekly expiry. So we are bullish on Bank Nifty also. Stop loss for Bank Nifty is now at around 42,000 level. Looking at the stock-specific setup, UltraTech Cement is looking very attractive. In the previous week, we have seen a strong rally. Short covering is visible in the previous session also. So looking at the overall setup for UltraTech Cement, we believe that this momentum is likely to continue further higher. We are projecting target of 7,500 for UltraTech Cement. Keep a stop loss of 7,300 for UltraTech Cement. Second stock is Cummins India, especially in last trader session. We have seen a strong buying action in last hour of trade. And looking at overall setup for Cummins India, we believe that this momentum can continue, and 1540 would be the possible target. One can keep a stop loss of 1455 to go long in Cummins India.
Right, thanks a lot for that and all the best for the day. Thanks for joining in. Well, the pre-opening rates are settling absolutely flat. Just a couple of stocks that you'd want to look at this morning. ITC, we'll be talking a little more about the acquisition of Yoga Bar in a bit. You have ICICI Pru, where their value of new businesses has gone up by 20% at 618 crores. So just keep an eye out on ICICI Pru as well. Delta Corp, the losses in the online gaming business continue, so that one is perhaps under a bit of pressure right now, and there's an upgrade on a lot of steel stocks, so we'll talk about that too. Tata Steel, CLSA has raised their target price to 130, so keep an eye out there. Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us now to talk about all that's been happening in the FMCG space. Abneesh, the first question is on the ITC acquisition. I know Yoga Bar is a relatively small acquisition, but the management believes that it's a 45,000 crore market size, this business. What are your thoughts?
Yes, thanks. Yes, it's a good acquisition. So what we are seeing is ITC is closing the white spaces. Yoga Bar will sit very nicely with the Ashirwad brand, which is the market leader in its space. And it will also add with the Sunfeast, which ITC has in the biscuit. So in the food space, ITC was not having a presence in the healthy food space. This will give them that presence. It's a small acquisition, but if you see in the last few years, it has doubled. Our view is in the next 3 years, it will have a very strong growth. We have seen that earlier in HUL's Indulekha scale up. In a few years, Indulekha sales became 6x for HUL. So my sense is 68 crores can be scaled up because of ITC's distribution, brand capability, much better understanding of the digitization. But this is a view we have been sharing for the last 4 quarters, that D2C business will be dominated by the listed FMCG players. 2 weeks back, we had seen HUL acquired 2 D2C companies in the same day. I think that's what will happen across the board. There is a winter funding dry up for the D2C. So yes, ITC good acquisition, but we will expect more such acquisition by most of the listed FMCG players in the coming quarters.
Abneesh, I was going to ask you about volume growth and earnings, etc., but I have to ask a follow-up to what you said. Any other eminently acquirable D2C brands right at the top of the list?
So difficult to comment on M&A, but I think 90% of the D2C in FMCG is available for grabs. I would expect 70% to shut shop in the next 2 years. I'll expect 25% to be acquired by the listed FMCG, and only 5% scaled up models will survive. I think Mamaearth is a good business. It has scaled up really well. But definitely most of the other small startups will face extremely tough times and they will get acquired. And FMCG companies acquire at the right time. So this is the right time. Valuations are favorable and they will learn from the D2C businesses also.
Okay, all right. Abneesh, hi. Morning. Nigel on this side. You're sounding fairly optimistic on this ITC acquisition. One would have thought it is a little expensive, but as you're saying, scaling up is going to be good. So it looks like a good acquisition for ITC. What about the other couple of stocks? HUL, they come out with this set of numbers, had a good run yesterday. The street seems to be sniffing something. What are your expectations with these numbers?
Yeah, thanks, Nigel. So yes, definitely tomorrow 2 heavyweight results are there. For both companies, we expect sequential margin recovery to start, and Q4 further it will build. YOY margin pressure for HUL will still be there because of the higher priced inventory. We do expect for both companies, the growth rate of volume will be higher than industry. See, there are 3-4 key things. INR worst is behind in terms of the depreciation. Harsh winter will help HUL in Q4. We are also seeing WPI inflation at a 22-month low. It's good for Unilever and all other FMCG in terms of lower end consumption. So things are looking up in terms of outlook for both the companies.
Okay, and for Asian Paints particularly, the stock is actually down quite a bit, right? From its 52-week high, it's off about 20%. Do you see valuation headroom if Asian Paints delivers this quarter?
Absolutely. If there is no shock and we'll need to wait for the results tomorrow, I would say that in Q4, the outlook is far better. In Asian Paints, it's a high beta stock, so quarterly results do matter. October month demand was very weak for the industry because of the rains. So that's not a structural issue. Demand is improving, and definitely the gross margins, EBITDA margin in Q3, Q4 will be much better than the Q2. So yes, it's looking quite attractive in terms of valuations also.
In your coverage universe, Abneesh, what else is looking interesting? Because stocks, I don't know if you've tracked Varun Beverages, but if you have a view, stocks been volatile.
Yes, we are positive on the name. Again, quarterly results for Varun Beverages is slightly more cyclical versus a HUL kind of business because it's a cold product. So whenever harsh winter happens, you will see those movements, etc. But definitely, Reliance entry here has to be watched because Reliance has acquired 2 companies here. So it's an interesting space. But yes, Varun Beverages still has huge headroom to expand market share. It has been seeing very good success in its new products. But in Q4, because of the harsh winter, at least in its cold beverage product, there will be risk and headwinds there. So you need to watch that. But yes, it is going to be one of the few companies where Reliance has to be watched very carefully.
Okay, well, I wanted your thoughts on Nykaa purely because, the stock is at an all-time low and there are rising concerns about what the long-term value in the stock could be. How does one approach it if there are still long-term investors here?
Yes, so here essentially 2-3 things are there. One, of course, the bonus issue, all those things happened, and then there has been share sale by the employees also. That's one concern. In general, we have seen the D2C valuations, e-commerce valuations cool off. But I think, again, Nykaa is a company which has really created an excellent business model. I'll have some apprehensions on the apparel side of the business, but in beauty and personal care, clearly extremely well-run companies. So those, the valuation comfort which has now come finally, I think that's very good. But definitely here, I will say that the overall D2C, what's happening in terms of the job losses, the gobbling up by the FMCG majors, that is still going to be an overhang on the stock in the near term. But yes, medium long term, this is a good stock to own.
All right, we will leave it at that. Thanks a lot for joining in. Have a great day. There was plenty of, stock talk. So let's keep it to that. In pre-opening, Delta Corp is your big loser right now, down 4.5%. As I said, the losses in the online business continue. Delta Corp is an F&O ban as well. So do keep an eye out on that stock. Apart from that, a couple of other names. Nykaa, remember, has hit an all-time low yesterday. So that one is down over 60% now in the last 12 months. In terms of result reactions today, there's IndusInd Bank, Persistent Systems that come out with numbers later today. So ahead of the numbers, let's see how that is shaping up. But let's also get in some 9-10 calls. Sudarshan Sukhani is with us. Sudarshan, looks like the market opening is going to be a tad bit in the green. What's the big call at 9-10?
See, it is possible we may break out above 18,050 by the Nifty, either on the after 15 minutes of cooling or on a dip, but be long. Gale is a buy with a stop under 96.
And Mitesh, how about you?
I'll go with the buy on L&T with a stop at 21.90 for targets of 2265.
Okay. All right. Thanks a lot for that. By the way, let's focus on a couple of brokerages then. CLSA, they have come out with a note on metals and they're appearing far more positive than what they were. So on Tata Steel, they upgraded the stock to outperform. They've increased the target price by 30% to around 130 rupees odd. They've upgraded JSPL as well, target price as well. Their moves from around 430 to around 610. And for Hindalco, they have their buy rating out there, but they've increased the target price from 515 to 580 odd. Though they continue to maintain their sell on JSW Steel with a target price of around 640. And on Vedanta as well, they have an underperform rating. The key factors that they have highlighted now, let's break it up into three. One is China, US, and then India. For China, they're saying they're seeing a faster reopening than what was earlier anticipated. Stimulus as well is helping, and it's giving a new lease of life to the sector. On ground, though, demand improvement, that's still elusive. So you'll have to wait by for post the Chinese New Year to see whether or not demand comes back. That could be the catalyst for re-rating from here on. On the United States, they say that, yes, a recession looks imminent, but maybe it could be shallower than what was earlier expected. So that's the hope out there. And on the domestic side, that's here in India, demand is resilient, though with large steel capacity expansions coming on stream, well, the focus and the, the dependence on exports will continue. In case all that steel that's going to be produced is not consumed domestically, then you'll have to keep looking at the export avenue as well. So expecting metals to be in focus.
All right, Nigel, thanks very much for that. So that's Tata Steel, steel names, metals in focus with CLSA shining the spotlight there. Let's revisit HCL Life and Glenmark with Ekta, who's standing by. Ekta.
Thanks for that. Well, the news with regards to Eris and Glenmark is that Eris is going to be acquiring 9 of Glenmark's dermatology brands for around 340 odd crores in the Indian market. It turns out to be a valuation of around 4 times FY22 trailing sales. Now, Eris, for example, would be in focus because Incred, for example, says the portfolio is mature with a little growth over the past 3 to 4 years. Hence, the valuations are not cheap. Separately, they did come out with their Q2 FY23 numbers as well. The organic growth was around 9.5% versus expectations of a mid-teen growth. So that missed expectations. Plus, the margins came in at around 32%. No real improvement from last quarter. And this compares to 36.6% in the previous year. Now, guidance is cut for Eris as well. This is because of delay in new launches as well as inventory write-off in one of their multivitamins. So FY23 revenue growth guidance is cut to 25 to 26% versus 30%, and EBITDA growth guidance is scaled down to 14 to 15% versus 16 to 17% as well. Glenmark, however, this news of divestment would be positive. They have really stepped on the gas when it comes to divestments in the past couple of years. 2020, they did divest the V-Wash female hygiene brand to HUL, select anti-allergy drugs in Russia and CIS to Dr. Reddy's. They did list their API arm in 2021. They did have an out-licensing also, which took place in 2022. Just a month ago, they sold a cardiac brand to JB Chemicals, and now they've sold dermatology brands worth around 340 odd crores. The company is looking to reduce debt. They have said one of their guidances is to further debt reduction, free cash generation in FY23. And they've already reduced debt by over 1,250 odd crores in FY22. So this would bode well for them on a larger scale.
Okay, pleasure. Thanks a lot, Ekta, for giving us all of those details. For now, the market opening is looking quiet, but with a positive bias. 18,000 is holding for the Nifty. That's what the pre-opening is suggesting. We have about 20 seconds left to go. Lots of stocks in focus today. Upgrades by CLSA on Tata Steel. You have ICICI Pru reacting to its numbers. Good numbers from the likes of Metro Brands that came in during market hours yesterday. And lots of other stocks in focus like ICICI Lombard, etc. I'd also keep my eye out on the tech stocks, which have been gaining quite a bit of ground. The big mover this month is HCL Tech, which indicates that it's going to see some more of an upside this morning, up about 0.7%. So that's the first tick on the index, very quiet, absolutely flat. The Nifty holding on to 18,050. The mid-cap index up about 60 odd points, but the trend is marginally on the upside. The Bank Nifty is the only one that's dragging its feet a tad bit. Tata Steel is your big mover on the back of the CLSA upgrade, perhaps. The target price is 130, so it's not too far away from where Tata Steel is currently at, but it's still your big mover. It has other metal stocks for companies, so Hindalco is in the green as well, and a couple of other names too. Apart from that, you have the life insurance companies. SBI Life is topping the charts this morning, up over 1%. And then you have IT, yet again, HCL Tech, Infosys, Tech Mahindra. Motilal Oswal was telling us yesterday that they are nibbling into the large cap technology stocks after the numbers were not too bad. Bharti Airtel is the other one, up about 0.6%. A lot of pharma names also looking pretty good this morning. So there's Dr. Reddy's, which is trending in the green, up almost 0.3% right now. Apollo Hospitals as well. Jefferies has a very interesting note on the hospital space, where they have buys on Apollo, Fortis, Max and Medanta, which is their top pick. More on that later. But for now, that space is looking pretty good. On the downside, Reliance is dragging its feet ahead of the numbers on Friday. Expected to be a pedestrian set of numbers this time around. There's been a bit of a slowdown seen in both their consumer verticals as well, both retail as well as Geo. So just keep an eye out on that. M&M down about 0.2%. Cipla is down about 0.3% as well. And some banks are dragging, as I said earlier. ICICI Bank ahead of its numbers on Saturday. Axis Bank in the red. Asian Paints ahead of the numbers tomorrow is flat. So very, very quiet. I'm sure there are some exceptional movers in the broader markets, but the headline index is a bit, ho-hum this morning.
Absolutely. As flat as can be is what we're seeing on the headline index. But let's talk about a few stocks. Delta Corp. You tried to get a room in Goa in the past quarter, and particularly in December, it was impossible, though the numbers don't reflect that. So the stock is getting clonked back down 6.5%. Clearly, the street is disappointed. We'll get clarity from the management in just a bit. Tata Metallics, the numbers were quite weak. The ductile iron pipes business, well, that was a little bit disappointing. However, the stock will move in line with Tata Steel since the merger is already announced. So that's what's saving the stock today. HCL Life, well, they've scaled back their guidance out there, and they've gone ahead and divested some part, they have bought some part of Glenmark Pharma, which has divested some part of their derma business. So Eris has opened up more or less flattish. Let's see whether or not Glenmark, well, they're going to be getting closer on 300 crores, or that should be reacting positively. You have RVNL, they won another order. The consortium has emerged as the lowest bidder for the Gujarat Metro projects worth around 1,000 crores. So that one's opened up, well in the green, up close to around 3% odd. Shalby as well, I think the initial tick was lower because the margins did compress by 200 basis points. So that's down close to around 3.5% as we speak.
All right. So you've got a 15-point change now, an absolutely flat kind of start. May not be the worst thing in the world. It gives one, provides one some amount of opportunity if one wants to, if one is so inclined to take long positions. It's not a super high, strong start or anything of that sort. Just a few other names. ICICI Lombard is down 5%. I mean, that is, of course, reacting to earnings. That's a big cut. A full 5% knock on ICICI Lombard on heavy volumes as well. So for this time in the day. Nykaa is down 3%. We were just talking about Nykaa. Yes, it was down yesterday as well. At 129, lower yesterday, lower today. Zomato was another one. All these new age names were all down yesterday. Zomato was down another 1.25% or so. And then there is Bank of India. Bank of India sold off 6.5%. Very aggressive selling yesterday on the back of the earnings which came through. It's down another 4% this morning. So, there is advance decline is clean 2:1 in favor of advances, but there is a fair bit down as well. Sula is another one. Sula was very strongly higher. It's down about 2%. So a little bit of profit taking is what we have in Sula. The big move on Sula happened day before yesterday. Yesterday also it was higher. but it's seeing some pullback. I mean, Paytm, we played out those sound bites of Vijay Shekhar Sharma, founder of Paytm earlier. Stock's up about 1.5% promise in terms of profitability. Again, it's at least higher as compared to the others, which are lower in that category. There's a name called HCL Industries. The only reason I'm mentioning that is because of the volumes on it. Very large, 12% on JTL. So 364 or so is where that is. And it suddenly shot up big time. Sundaram Fasteners is up 2% on strong volumes. And then there is Cummins India, which is up about 1.75% as well. Maybe a quick word on Hindustan Zinc as well, which is up a full 4% at about 360. So this is, just some color in terms of what's happening in the broader markets. The Nifty is still got about, 15 or 16 points, 18,070. Andrew Holland is with us, Chief Executive Officer of Avendus Alternate Strategies. He's a market master of the day. Andrew, great to have you with us here. Thank you very much for your time. Higher or lower? I mean, I think it's that kind of a binary question because, the question on lower comes from the fact that at higher levels, there is consistent selling. Foreigners have been sellers all through this year, which is all of 3 weeks or so. And on the upside, one can also make the case that there is not really very much wrong with the market per se. Which way would you go, Andrew? I'm talking about the near to medium term.
Yeah, no, it's. I think it's a little bit confusing, Prashant, because you've kind of nailed the part where there's optimism and a bit of pessimism as well. I mean, on the reopening of China, we saw some GDP data the other day showing last year was around 3% and the last quarter was around 2.7%, if I remember correctly. And that's due. Those figures are despite the kind of the shutdowns that they have. So obviously now the expectation is that growth will recover very quickly, and there'll be a lot of spending by consumers as they manage to get out, as we've seen elsewhere in the world and here in India too. So that GDP growth could be nearer to 5% this year. Therefore, it's a cheap market, and whilst we were all talking last year about how China is not so good and India's shining because of that, that reverse thinking is on the way, and that's why we're seeing more flows go towards China, some taken out of India because of that. So that's obviously hitting what the FIIs are thinking in terms of their views on India in the shorter term, which is putting the pressure on the selling. On the upside, you're going in markets which are being supportive globally. And one of the things which is I'm trying to work through, Prashant, is I'm sure you're hearing from Davos too, all the people saying it's going to be a recession globally, and we're not against that. But if I look at the data coming out of Europe, where it's been actually a very mild winter, and there's in fact supplies are more than adequate now. And if I look at the UK, where retail sales in over Christmas was very strong, house prices actually rose over the past month. What if we're wrong? What if there's not a global recession and actually it's really just a mild slowdown? What does that mean in terms of growth? And I think that's what the market's liking, that part of it in terms of the growth, which is pushing up European markets as well as the US. But then, when you look forward on that, you're going to have probably higher commodity prices because of China opening. And you'll probably have the Fed being, staying a little bit longer than we expect. So I think those are going to be the push-pull factors in terms of the markets over the next few months. And I think we're going to just be in a bit of a trading range, unfortunately.
All right, we're going to be in a trading range. By the way, just a couple of more details on ICICI Lombard. That's actually the big loser in the broader markets, down almost 5%. Now, of course, we do know that the premium growth was on the weaker side this time. The investment income was lower, and that dragged the profit growth for the company. But, Motilal Oswal has put out a note where they put out some highlights from the management commentary. And the commentary is also on the weaker side, where they mentioned that the competitive intensity remains very high, especially in the motor segment. And that's due to the passenger car category. So ICICI Lombard, not just numbers are weak, but commentary is also quite cautious. Andrew, hi, good morning. How are you feeling about India now? Do you think this resilience that we've seen all of last year, the outperformance, is something that can continue? And, how are you positioned? What's the asset allocation strategy within India in 2023?
Well, in fact, we're more constructive about markets globally going into this year. Yes, there could be, we think when we spoke last time, there's been a bottoming out process. We think that might continue. If I'm just, correcting what I'm saying, that, the global economy, is not as bad as maybe we were expecting, then obviously, there might be thoughts around stagflation at some point over the next quarter. So I still think, there's some downside to markets. In the shorter term. But I think once the Fed goes on hold, then I think the whole play on emerging markets and growth will continue to come through a lot stronger. I do think, though, that there's cheaper markets out there than India, and I think that will probably have, at least for the first half, whilst we might rise because we'll get flows, I think the flows will go to other countries, as we've been seeing, like Korea and China and Taiwan, over the past few months. So we might underperform, but it doesn't necessarily mean that we'll go down as a market unless global markets take a hit because of worries over many different things, including stagflation.
Hi, Andrew. Well, so, after a good 2022, maybe some bit of consolidation, maybe flows, go to other cheaper markets. Worst case scenario, what does Nifty go down to?
No, so it depends on obviously what the global market's going to move to. But I think whichever way I look at it, if the markets fall 5-10% globally, then I think we'd be half of that. I think the resilience is still there. So unless there's any shocks in the budget, which we're not expecting, then we'll continue to grind higher over a longer period. And I think if I was to think of where Nifty might be in terms of from where we are today. If it follows in line with earnings growth, which we're expecting anywhere between 10 to 15% growth, then I think that's probably where we'll end up by the end of the year.
Andrew, give us some sort of broad ways to think about trading ideas at this point, because I'm assuming that you don't have a firm conviction of which way the market heads, so you trade around, and you can do that in the fund. So just give us a sense of what you're doing or what you want to do in an environment like this.
So I think, Prashant, what you have to think about is the very near term and what are the catalysts. And I think the catalyst is obviously going to be a Fed going on hold, and when you think that will be. We think it's going to be in the first quarter of this calendar year. So if that's the case, then I would think that growth stocks in the US or tech stocks in the US will probably have a push higher from where we are today. I'm not saying that some of the individual stocks might not have problems, but I think tech stocks in by and large will move higher, and I think that's probably the tailwind RIT stocks need, to push higher over the first quarter. And I think that's what. So if I'm thinking about the kind of trades, then that's a trade I would want to be on the long side, and alongside that would obviously be the reopening of China. And we're already starting to see commodity prices starting to rise, and obviously analysts will, as we've seen today, will start upgrading forecasts, for the metal pack going forward as well. So those are two kind of long trades, and I'd probably just offset that with maybe kind of thinking about where I would want to short, and obviously higher commodity prices are going to lead to sectors like paints and autos, again, being under pressure in the very short term.
All right. So you're saying that go long on the IT stocks, right, in India?
I'm saying if that's the view of you, my view is that that's what's going to, the Fed's going to play out, and that's a more shorter term trade, yeah.
Okay, that's a shorter term trade. Got it. The other space I wanted to talk to you about was private capex. We just had a note that we put out from Bank of America's BofA Securities, where they mentioned that government capex had picked up until now, but this is going to be the year when private capex picks up in a big way, because the government is opening up a lot of monopolies to attract both private as well as government capex. If that is the case, who do you see as the big beneficiaries? Will it be cement stocks? Will it be infrastructure names? L&T is at a record high as well. How do you play this theme?
It's something we talked about, Sonia, for most of last year with you, in that we do expect the global recovery to be from a global capex cycle picking up, and there's two areas which are definitely going to receive a lot of expenditure both from government and private companies. Is going to be renewables and defence. So those two, are going to play out throughout the many years. In terms of kind of normal kind of capex, yes, you're going to have the government spending on roads, bridges, and so forth. But I think it's the areas where there's been a security problem in terms of supply, where you're going to see a lot more manufacturing come into India, and that lends itself to other parts of the kind of industrials. So the kind of Siemens, the ABBs of this world, I think will garner more contracts going forward, and I think you've seen that in terms of the share prices rising over the past year or so, and I think that will continue. So I think it's good that there's a lot of capex coming from the private companies, and I think the PLI is going to help. And I'm just looking through some stats in that whilst exports are falling, electronics are picking up, and I think that's going to be a big area for India if they can grab the opportunity in electronics going forward, not just to meet the domestic demand, but also for exports going forward. So I think that's going to be a big theme. So whilst I'm saying that the index might be in a short-term trading range, I think there's going to be the themes that play out this year, and that's where you're going to make the big money.
Okay, well, thanks a lot for joining in, Andrew. Have a great 2023. We'll keep chatting with you through the course of the year, but thanks for joining us on the channel today. Moving on, the big stock in focus on the downside is Delta Corp. Gaming and hospitality major Delta Corp posted a muted set of numbers. The Q3 margins were under pressure on the back of sluggish growth. It's the gaming and the hospitality segment that was under pressure. Also, online gaming continues to be under stress. Hardik Debar, the Group CFO of Delta Corp, joins us now to talk about that. Hardik, good morning. Thanks for joining in. I want to first talk about online skill gaming, which has been under pressure for a while. It continues to report an EBIT loss, the online business. Tell us, when do you see a turnaround? Will it be in this fiscal itself, or would investors have to wait a bit far out, perhaps into FY24? Hardik, we can't hear you.
Sorry. Good morning, Sonia.
Go ahead. Go ahead.
Let me just clarify that the online gaming business historically has been a profitable business. It's in the last couple of quarters that because of the change of strategy and change of focus that we have increased our marketing spends, increased our advertising, sales, promotion activity, because of which and the fact that we have launched our multi-gaming platform Adda Games, which I have always said is going to be the funnel for acquisition for customers. And it is the spend on these areas that is being incurred now in the last few quarters. That's why you are seeing the flattish or kind of break-even sort of a situation. Otherwise, historically, if you go back in history, you will see that the online gaming has been profitable. And if you bifurcate and segregate the poker business from the rummy and the multi-gaming businesses today, poker continues to enjoy 27-28% kind of EBITDA margins. What you are seeing is a blended version of all the gaming coming together. Sure. So I don't think it's as bad as it is being made out to be.
So the question really is, since your spend has gone up, right, marketing spends for Adda Games, can you tell us what is the marketing spends as a contribution to sales? How much will it go up further? And in terms of a timeline, when do you think you could get back to profitability on the online side?
So I think from a growth perspective, this is an investment phase, if I may say, and marketing and sales promotion on the online space is nothing but an investment that one does in terms of customer acquisition, in terms of penetration, in terms of growth, and in terms of widening one's reach across the country. And therefore, I think it's a couple of quarters before we start seeing the results of these investments. And I believe that in the next maybe, a couple of quarters, maybe 3-4 quarters, we should see kind of a steady state, inching back towards the growth and profitability trajectory.
All right. Hi, Hardik. Good morning. This is Nigel on this side. So a couple of quarters before online gaming moves into profitability, what about the hospitality business? So say by Q1 of FY24, both of them get back into the green?
So Nigel, again, what you are seeing is, from a blended perspective, if you look at the hospitality business again, post depreciation, at the operating level, both the hotels that we operate are contributing and it is making money. It is only post depreciation that you are seeing these negative numbers, if at all. But otherwise, from an operations perspective, before depreciation, both the businesses are contributing and making positive returns. And just since Sonia mentioned in the opening remark about the offline gaming, I think, the one needs to look at the numbers in a slightly different perspective. Given the fact that you're comparing it with December 21, when we were just starting operations from the second wave of COVID, and our costs and our salaries and our operating costs were not fully back to the normal levels, and it's only from January 22 onwards that we ramped up our employee strength back to the old pre-COVID levels, and the operation cost went back to pre-COVID levels. So I think comparing December 21 on a cost-to-cost basis and saying that the margins are under pressure, I don't think that's the right way to look at it. If you look at September 22, the quarter that has gone by, we've done about 270 odd crores on gaming, and we've done 270 crores, and on the gross basis, it's about 335 crores, and we've maintained the 34% EBITDA margin, which is, I think, broadly.
I think you believe that those numbers are not so bad, but the stock market has given its verdict today. It believes that it was expecting more, actually, because on a sequential basis, there's no revenue growth. They expected higher numbers, is the read-through. But as you're saying that...
Nigel, stock market is something which we do not have a control over.
Sure.
It's a question of how people view and what the sentiments are. I personally believe that it's a strong reflection of the business. Second quarter has always been the best quarter if you see historically from a delta perspective. Third quarter has never better than the second quarter. It is always reflected and mirrored the second quarter. Given that, I think we are on the right trajectory. I believe there are certain overhangs that are there on the stock, which all of us know, and we are hopeful that those overhangs are soon going to be, kind of history. And we believe that while we are continuing to perform from an operations perspective and doing what we do best and what we know best, I believe rest for the markets.
No, that's a point. Point taken. Point taken. It's just that, Q3 is also... Q2 is the best for you, as you said. Q3 also, the expectations was it's going to be a good quarter. On that comparison point, while costs were not fully in, Hardik, you would appreciate that, on the revenue front also, it was not... so in that sense, right, because it was a low revenue quarter as well, costs were also not fully baked in, and both came back in the quarter. So that Y-on-Y comparison point that you were making. But let's look ahead from here, Hardik. How are things going to be in your opinion? Give us some kind of number, some kind of way to think about how your business is going to pan out over the next couple of quarters.
Let's look at it from this quarter perspective, that this is the first time ever in the history of Delta we've made a cash profit of over 100 crores. Now, we have all been very fascinated by the top line growths and the customer acquisition growths in various other businesses and other stories, and we've seen what have happened to those companies. Here is a company which is generating cash, sitting on 650 crores of cash. And like I said, in the quarter, this is the first time ever we've crossed 110 crores of cash profit. And like I said, the traction and the trajectory is on the right path. The offline gaming business has done well as far as we are concerned. Obviously, we are going to be adding capacity in the coming very near future in the coming in the new financial year, like we have already gone on record. So, with all the capacity addition, when we add capacity, a new product is brought into the market. We have always seen that there is disruption, and then we see growth that happened in 2013-14 when our current largest facility was introduced.
I take your point that, I mean, a lot of work is being done from your end. But, you were talking about some additional headwinds that the industry is facing, right? There are a lot of proposed guidelines from the Ministry of Electronics with respect to more due diligence in terms of a better KYC. There's also a proposal for registering online gaming with a self-regulatory body. Only those games will have been cleared by the body which are allowed to legally operate in India. So all these regulations, once they're put in place, do you think it would be a bit of a hindrance for your growth? Just trying to understand how it would affect the industry.
We have always been ardent proponents and supporters of regulation. And we believe this is only going to give more clarity and a better status to the entire sector and entire business as a whole. We have been following the KYC norms even today. We have been doing all the things that are being asked. It's only that it is now being documented and we are being asked to follow in a certain manner and certain form and fashion. The self-regulatory body, we already have a kind of an organization called the All India Gaming Federation, which is putting out best practices and rules and regulations that a good operating company should be following. We are all abiding and adhering by it, and it's only going to further better and strengthen, and it's a level playing field for everybody.
Okay, all right, Hardik. Final question before we let you go. As you said, trajectory and traction is moving in the right direction. Just 2 points I want to ask you. The online IPO, what is the timeline out there? Point number one. And any update on the Daman case hearing? Because that is going to be a big trigger out there. Your answer to both these 2 points.
So Daman case hearing, we just completed a merger of Daman Hospitality with Delta Corp. So, there is a little bit of a procedural thing required wherein the RIT name needs to be changed from Daman Hospitality to Delta Corp. The formalities have gotten completed. So we were anticipating this week the case to be listed, but it will come up now, hopefully next week. And now we have moved from the weekly board to the daily board, so we'll get a fair hearing. And I hope justice will prevail, and we hope to get a fair chance at what we believe is a strong legal position that we are in. With regards to the IPO, we have completed all the formalities. We had done a bit of an investor interaction as well. But I think giving a timeline is all depending on the overall market situation. There is a lot of volatility and uncertainty. We'll wait for the right times and the other headwinds, like Sonia was saying, all these things to get clarified. And at an opportune time, we will assess the market and launch the issue for sure.
Got it. Thank you very much, Hardik. Appreciate you joining in and telling us all of that. Good luck. We'll speak again soon. Thank you. The Nifty has moved up and nicely. It's a solid 40 points. Let's hope it holds now. Almost 18,100. We are at the day's highest point on the Nifty. Just a few other names which have moved up. Max Financial is at 825 now. It's the top volume gainer. It's up 3%. RVNL, of course, was there. RCF is another one which is up 3%. APL Apollo is up 3%, 1175. Hindustan Zinc, we'd mentioned earlier. All cargo is up a full 5%. Actually, there is a fair bit of these smaller fertilizer names which are all buzzing. So maybe we put the spotlight on those. But it's a decent kind of move up after a flat open that we had. We'll take another quick break here. Dr. Naresh Trehan of Global Health will join us to talk about the key trends in the healthcare services space. Of course, a bit of an outlook on their respective business as well. Later, we connect with Nissan Joseph of Metro Brands to discuss earnings which they reported. Stay with us.
Co-presented